Welcome to Explain the Charts, where we break down the market's complexities through news and chart analysis. Today, October 2nd, 2024, we'll be examining USDCAD, the US dollar-Canadian dollar pair, to see what the current market conditions are saying about this major currency pairing. As we can see on the daily chart, USDCAD has been trending upwards for the past few months, with a notable breakout from a consolidation pattern around 1.34. This upward trend suggests a strong bullish sentiment, with the US dollar gaining ground against the Canadian dollar. The recent movement in USDCAD can likely be attributed to the ongoing geopolitical tensions in the Middle East. The escalation of the Israel-Gaza conflict has heightened global risk aversion, leading investors to seek safer haven assets, including the US dollar. The price has been testing a key resistance level around 1.37, which could be a significant factor in determining the future direction of the pair. If the price manages to break through this resistance level, we can expect further gains in USDCAD. However, if the price fails to break through and reverses back down, it could signal a shift in sentiment towards the Canadian dollar. Let's take a closer look at the 1-hour chart to get a better understanding of the short-term price action. On the 1-hour chart, we can see a more volatile price action, with several swings up and down. The price has recently pulled back from the 1.37 resistance level, suggesting a possible short-term retracement. This retracement could be an opportunity for traders to enter a long position, hoping for the price to rebound towards the 1.37 resistance level. However, it's crucial to be mindful of the potential for further downside movement, especially if the geopolitical tensions escalate. The 15-minute chart provides even more granular details about the price action, allowing us to identify potential entry and exit points for short-term trades. Looking at the 15-minute chart, we can see a recent bounce off the support level around 1.35. This bounce could be a good sign for bulls, indicating that the price may be ready for another push higher. However, it's important to remember that the market is highly volatile and the price can quickly reverse direction. Traders should use proper risk management techniques to limit their potential losses. The current news environment suggests that the Canadian dollar may be under pressure in the near term due to the potential for reduced oil demand in a global economic slowdown. This could lead to a weakening of the Canadian dollar against the US dollar, putting downward pressure on USDCAD. However, the Bank of Canada's recent interest rate cuts could provide some support for the Canadian dollar. This could limit the downside potential for USDCAD. Ultimately, the future direction of USDCAD will likely be determined by a complex interplay of factors, including global risk sentiment, oil prices, and central bank policies. To recap, USDCAD is currently in a bullish trend, but the price is facing resistance around 1.37. If the price breaks through this resistance level, we can expect further gains. However, if the price fails to break through and reverses back down, it could signal a shift in sentiment towards the Canadian dollar. Traders should be mindful of the potential for short-term retracements, especially on the 1-hour chart. The 15-minute chart can be used to identify potential entry and exit points for short-term trades. It's important to use proper risk management techniques to limit potential losses. Looking ahead, the key price levels to watch are the 1.37 resistance level and the 1.35 support level. If the price breaks above 1.37, it could signal a strong bullish breakout. However, if the price breaks below 1.35, it could signal a shift in sentiment towards the Canadian dollar. Traders should also be mindful of the potential for increased volatility in the near term due to the ongoing geopolitical tensions. The release of key economic data, such as the U.S. non-farm payrolls report, could also impact the price of USDCAD. Thank you for joining us on Explain the Charts. Remember, this is not financial advice. Always conduct your own research before making any trading decisions. Happy trading!